What if the same principles that predict how cracks grow in a steel beam could unlock the secret to growing your wealth? Welcome to the Mechanical Engineer's Guide to Investment Strategy, a groundbreaking guide by Ankit Nainwal. Join us as we bridge mechanical engineering and investment science, applying crack growth theory to craft a powerful strategy that maximizes returns and secures your financial future. Let's start with crack growth theory, a cornerstone of mechanical engineering. Initial analysis. Engineers study material properties and stress conditions to identify vulnerabilities. Fatigue modeling. Crack growth rates depend on load patterns and frequencies, like a bridge enduring repeated traffic. Failure prediction. High-low load sequences, starting with intense stress, cause faster damage than low-high patterns. This isn't just about metal, it's a blueprint for understanding how small choices amplify outcomes over time. The sequence of stress matters. High-low sequence, higher initial fluctuations create crack nucleation sites like intense vibrations in a young structure. Subsequent lower fluctuations rapidly expand these cracks, accelerating damage. Low-high sequence, lower initial fluctuations create fewer cracks, so later high stresses find less to exploit, resulting in less overall damage. This high-low effect, starting strong then stabilizing, isn't just mechanical, it's the key to smarter investing. Now let's translate crack growth to investing. Damage in finance. This equates to annualized investment returns, the outcome of your strategy. Low fluctuations. These mirror fixed income investments like bonds, stable but slow growing. High fluctuations. These represent equities like stocks, volatile but with high growth potential. Just as high-low stress sequences amplify mechanical damage, a high-low investment approach can amplify your wealth, starting with bold moves and stabilizing later. Picture your career as an engineer. Early career, allocate heavily to equities to capture high growth, like intense stress sparking potential. Mid-career, gradually shift toward fixed income, stabilizing your portfolio as cracks would slow. Late career, adopt a conservative allocation to preserve wealth, like low stress protecting a seasoned structure. This high-low strategy leverages volatility when you're young and safeguards gains as you near retirement. Contrast this with a low-high strategy. Conservative start, beginning with fixed income, limits early growth. Missed opportunity, you sacrifice the compounding power of equities in your prime years. Underperformance, this leads to lower lifetime returns. Starting too cautiously is like applying low stress to a material first. You miss the chance to build a robust foundation, leaving your wealth vulnerable to time's erosion. The numbers back this up. High-low returns simulation models show an average annualized return of 12.8%. Low-high returns a mere 8.2%. Wealth difference. The high-low strategy yields 50% more accumulated wealth over a career. This isn't guesswork, it's a mathematically validated edge, proving that starting with high-risk, high-reward investments pays off exponentially. Ready to engineer your financial success? Follow these steps. Assess time, horizon. Calculate years until retirement or key goals. Establish risk tolerance. Balance engineering precision with personal comfort. Create allocation schedule. Plan systematic shifts from equities to fixed income over decades. Regular rebalancing. Adjust annually to maintain target allocations through market swings. Like designing a flawless machine, this disciplined approach builds wealth with precision. Let's bring it home. Theory, application, crack growth principles give engineers an investment edge. Optimal allocation. The high-low strategy maximizes lifetime returns. Disciplined transitions, systematic shifts ensure stability. Financial security. This approach engineers your path to retirement success. You're not just an engineer, you're an architect of wealth, using science to build a secure future. The Mechanical Engineer's Guide to Investment Strategy transforms how we approach wealth building. By applying crack growth theory, you can harness volatility early, stabilize wisely, and secure lasting prosperity. As Ankit Nainwal shows us, engineering isn't just about machines, it's about designing a life of financial freedom. Start your high-low journey today, consult a financial advisor and engineer your way to a thriving future.